What's up, guys? This is Tai Zen. Welcome to cryptocurrency.market. This is a trading, investing, entrepreneurship. This is a real world trading and investing channel. This is not a channel based on theory. This is not a channel based on some silly technical analysis that sounds good on paper, but does not make you money. Like, we only talk about the stuff that we have used in the markets to make us money, okay? We started trading and investing back in early 2013, and since then we have retired. On our team, we have retired and are free to go do whatever we want now. Okay, and so I just want to make that clear that we do not talk about airy fairy tale stuff on here. We talk about real world trading, the things that impact your taxes, the things that impact your profits, and things like that. Okay, so now, in this video, guys, I want to share with you a guideline that I use. Now, keep in mind, this is not a law, this is not a rule, this is a guideline, okay? For me, it's a guideline, but for you guys, it really needs to be a rule, and it needs to be a law, okay? So I'll give you an example of what's a rule or a law in trading, okay? For example, you guys have heard me say that whenever you trade stocks, futures, Forex, things like that, you never want to risk more than 1% of your entire portfolio on a single trade, which means that if you have a $100,000 portfolio, 1% of that is $1,000. You never want to risk that much, more than that, on a single trade, okay? So, if you are a beginner, I would not risk more than a quarter of 1%. The reason is because there are times in trading where you run into multiple consecutive losses, back to back to back to back. Maybe 5 losses in a row, 10 losses in a row, 20 losses in a row. It's possible, guys. It's possible, okay? It's possible that you make, 5 trades today on Monday, and, they all lose money, and then you did everything right, but the markets weren't going your way, and you lose money. You go back Tuesday, you lose another 5 trades, you come back Wednesday, you lose another 5. Thursday, you lose another 5. And then on Friday, you finally, the market, favors you or is working for you, and now you get to make all that money back and more. Okay? This happens in trading, guys. This is not something that's new. This is not something like that doesn't happen. It happens quite often in trading. Okay? That you get a long losing streak, and to protect yourself and still have a portfolio to trade, you got to keep it under 1%, 1% or under, okay? I am experienced, okay? I'm an experienced trader. I've made thousands of trades in my life. And when I trade, right, it's possible for me to risk 1%. But if you're a beginner, you cannot start your trade with more than 1% because mathematically it will not work. It's not that I say that it won't work. If you do the math, it just won't work out over the long run, okay? So, that is a law. That is a rule. That cannot be broken. Okay? Now, what I'm about to share with you, so that is a law because mathematically, it does not make sense for you to do it. Like, if you did the math out, right? If I lose 66% of the time, right, and I win only 34% of the time on my trades, and I risk 5% on each trade, there's a chance that I might have, 10, 20, 30 losses in a row that will wipe out my portfolio or reduce my ability to trade effectively, okay? So that's why I say that that's a law or that's a rule, okay? The 1% rule, okay? Even when I'm trading stocks, Forex, futures, things like that, I open my position with way less than 1%. And then if it goes in my favor, then I'll add more to it. But I don't like risking more than that. Now in crypto, I say that, but in crypto, I actually risk a lot more. I risk like 3%, 4%, but no more than 5%, okay? The reason why I do that is because the crypto market is inefficient. There's a lot of inefficiencies in the market, and when I say inefficient, what I mean is that the infrastructure is not built for shorting. It's not, the stop losses are not in there. There's a lot of stuff that you have in the regular traditional markets that you don't have in the crypto market, and because of that, I can get away with risking 3% of my portfolio on one trade or 5% of my portfolio on one trade, okay? However, each year that goes by, right, I'm reducing it. Like in 2017 at our bootcamp, we would, tell people that we would risk 5%, 3 to 5%. But then in 2018, when we did the exact same bootcamp again and updated the curriculum, we would tell our students, our bootcamp attendees, that, hey man, we're reducing that. We're no longer, because the market is more mature now, it's becoming more efficient, we have to lower that 5% down to like 3% now. Okay, so, and I anticipate lowering that 0.5% or 1% each year moving forward until it gets down to about 1%. And at that point, we don't have to reduce it anymore, okay? But that's a law, that's a rule. I'm not gonna change that. And if you ask me in person or on video, I'm gonna tell you the same thing. If you come to our boot camp, I'm gonna tell you the same thing. If you watch a blueprint, I'm gonna tell you the same thing, okay? Speaking of blueprint, you can get a copy of our cryptocurrency investing blueprint at www.cryptocurrency.market/blueprint, okay? Stop trying to figure it out on your own. Go get a copy of it and learn how to do it right, okay? Anyways, guys, I wanna share with you guys a guideline for me. It's a guideline for me, but for you, it needs to be a rule. It needs to be a law, okay? Because you haven't traded enough, you haven't had enough experience to figure this out on your own. I've already figured it out. You just go and implement it, okay? And this works for everyone in any market, okay? The first rule I'm gonna share with you, okay, is what I call the 50% rule, okay? The 50% rule, okay? The 50% rule works like this, okay? If this is a candle, if this water bottle represents a candle, and this is the low of the candle, and this is the high, I'm not talking about the body, the close or the open price, I'm talking about the high of the wick and the low of the tail, okay? The 50% rule is the halfway. I don't care what color the candle is, I don't care what this is, right? What direction the market's going, I don't care any of that. The only thing I care about is that the top half of the candle, if price closes above in the top half, it's a bullish candle. If it closes in the bottom, it's a bearish candle. That's all I need to know. Okay, that's the simplest way to read candlesticks. Okay, so you guys don't goof around, try to learn all these patterns and everything. If it's up, okay, it's down. Okay, now if you want to add 4 or 5 candles together, right? You add them together and you look at the first. Like if you had 5 candles like this, you look at the opening price on this, and you look at the closing price on the last candle. Whether these are 5-minute candles, these are single 1-minute candles, these are 4-hour candles, it doesn't matter. Open price, closing price. So during that duration of time from here to here, where's the open, where's the close, and that determines if that period was bullish or bearish. That's one, okay? So now let's look at a trend, okay? Pretend that this water bottle is the trend. This is the bottom of the trend, this is the top of the trend, okay? Now, you guys know that we sell into strength, okay? Selling into strength means that as the price is going up, right? As the trend is going up, right? As the trend is going up like this, we are selling, okay? Ideally, we want to begin the selling after it crosses the 50% mark, right? So from here, let's say Bitcoin's 1,000 down here, 20,000 up here. If it goes up above 10,000, right, that's when we like to start selling and start taking profits all the way up until it goes up to 20,000. Now, hear me out. It's easy for me to say that. I know what you guys are thinking, Ty. I know it sounds great. You know, now you're being a historical psychic, okay? Like you're looking at the price, you know it went up to $20,000, and then you know it came back, so you know that the halfway point is 10,000. How would you have known that when Bitcoin was only at $1,000? How would you have known that when Bitcoin was only at 5,000? How would you have known that if Bitcoin's at 8,000? And the answer is, I don't know. I don't know, okay? And nobody knows. Nobody knows that when Bitcoin was at 1,000, it was going to go to 20,000. Nobody knows that when it was at 5,000, it's going to 20,000. Nobody knows. If they tell you they know, right, they're full of BS. They're full of hot air, okay? They are not. I almost said the wrong words, but I'm trying to work hard, guys, on keeping it so it's PG-13, so kids out there can watch this stuff in their house too, and parents can watch it with their kids, okay? So the 50% mark, okay? So when price is going up, we don't know that. We don't know that. So what happened was when price went up and it breaks the 3,000 high or whatever, Leon and I started getting ready, right? And then when it started to double, like to 6,000, hey, we're thinking, hey, we need to sell a little bit, 1, 2 Bitcoins here, 1, 2 Bitcoins there, all the way up, right? So we're selling it to take profits because we don't know. Nobody knows. We don't know if it's going to go to 8,000 and turn back around. We don't know if it's going to go up to 10,000 and turn back around. We don't know if it's going to go up to 15,000 and turn back around. We don't care. It's selling, it's speeding up, and the trend is at a vertical like this. We are selling because when it crashes, it's going to crash very quick. Okay, so now the 50% rule, we really cannot use that because we don't know what the high was. Okay, but here's where the 50% rule applies. Now that we know that the high was 20,000, right, and it's down. And it's falling from 20,000 down to 19,000 to 18,000, 16,000, 17,000. We will continue to sell if we need to. If we need to, okay? I sold most of my Bitcoins on the way up, right? So by the time it started to roll over, I didn't have to sell anymore. Leon was selling his Bitcoins all the way up, and then he was selling it on the way back down too, okay? So we would sell it up, back down, okay? Now on other altcoins, I would sell it on the way up and I would sell it on the way back down. Like NEO, I was selling it on the way up and I was selling it on the way down, okay? But on Bitcoin, I didn't have to, okay? So once it crosses from here to here, right here, 1,000, here's 20,000. Once it comes back down and the price comes back down to 10,000, when it drops below that, all selling is off. All selling is off. There is no longer selling now. The trend has changed, okay? So we don't sell no more, okay? So now we are in the buying phase. Right now, Bitcoin's at around $3,500, $3,600. We're buying. We're slowly buying, you know, 1 or 2 Bitcoins a week, 1 or 2 Bitcoins a week, a little bit here, a little bit there, $100 here, $100 there, $100 a week, $200 a week, $1,000 a month, $2,000. Whatever the amount is, it's just got to be consistent and just do it on a regular, consistent basis, okay? So now we're going to continue buying, okay? Now, at some point, we might stop. Let's say the market goes back up. It goes up to 3,000, 5,000, 6,000, 7,000, 8,000. We might buy a little bit, and we might stop. However, when it crosses the 50% mark, which is 10,000, all bets are off. We are no longer buying anymore. No longer, okay? So all this is great if you have like a small account, like less than $100,000, that's great. However, once you start having a bigger portfolio, let's say $500,000, million, 2 million or more than 7 figures for sure, right? If you have more than 7 figures for sure, then the process to do this is slightly different. It's slightly different, okay? And I'm going to share with you what I call the 1/3 rule, which is 1/3, okay? So let's say, same thing, 1,000 to 2,000, okay? 1,000 to 20,000, I mean, right? When it starts to roll over, okay, and it falls down, you divide that 20,000 into 3 sections, from 1 to like 6,500, 6,500 to 13,000, 13,000 to 7,000, whatever. It's like 66, 66 or something like that, if you divide up into 3 equal units, right? So what happens is, once it goes up, and then it goes to 20,000, and it rolls over and it falls down, once it starts to fall down to where it's around 13, 14,000, that's the 1/3 mark, right? That's when I stop all selling. I stop selling. I don't need to wait until it goes down to the 50% mark for me to stop selling. I'm going to stop at the 1/3 mark, okay? And that's it. Now, when the price starts to fall down from 13,000 all the way down to like 6,000, 7,000, that's the lower 1/3, okay? So I stop selling at the top 1/3, the middle 1/3, I don't do anything, and then the bottom 1/3, okay? That's when I start buying back in. So that's why some of you guys said, hey, you know, Ty, you've been saying to buy at 6,000, 7,000, you know, stuff like that. Well, you're right. I have been saying that because that's part of my rule, that I need to get orders filled, so I cannot wait until it hits the bottom and then try to buy it, because at that time, when it starts to go back up, everybody and their mother is trying to elbow me to try to get those orders. And I don't want that. So I want to fill my orders when everybody's selling theirs. I want to buy it. I want to buy it. You know, so that's why you got a lot of these idiot trolls that say, oh, you know, I'm selling my coins to other, you know, newbies or beginners or poor people like that. You know, I have no idea what the hell they're talking about, because I do that when the price is running up, and when the price is crashing, I'm buying. Like, how come they don't say, hey, you know, Ty's buying all those coins from the newbies, the beginners that's, you know, selling, you know? Like, how come they're not saying that? How come when they're not saying that I'm buying when the market's crashing? So that, to me, that doesn't even make any sense, right? So what happens is, when it starts to go down to the 6,000, 7,000 area, I'm going to start buying. Now, what happens when it crashes down and then starts to roll back up, right? It starts to go back up, right? It goes back up to above $6,000, $7,000. If I need some more tokens, I will continue buying. as long as it's still in that 1/3 area. However, once it crosses the $6,000-7,000 1/3 area and starts to go back up to 20,000, I will stop buying. And for sure, if it gets past the 50% mark, I will no longer be buying. Okay, I will reverse my brain and start looking for reasons to sell. I will start selling little bit at a time. Okay, so the reason why I'm sharing this with you guys, okay, is so that you guys have some type of guideline, some type of rule, some type of structure to know when to buy and when to sell, or so that you guys are not looking for other people online to tell you. Now, there are other ways there's other ways to calculate when to buy, when to sell, and things like that. I do not want to get in depth about it, right? I do that with my Blueprint and my Bootcamp students simply because they have direct communication to me. They can call me up on the cell phone. If I say something and they don't understand, they can contact me directly, okay? So because of that, I tend to do it with them. But for you guys on video, I want to share with you guys the 1/3 rule and the 50% rule, just so that you have a guideline so that you know when I should be buying and when should I be selling. So you guys hear me say buy right now, buy Bitcoin, all that stuff. However, once it starts to get above 6,000, I'm not going to be saying that anymore. I'm going to be starting to say, hey man, just sit on your hands and stay on the sidelines and let's wait and see what happens. And then when it starts to get above 10,000, then that's when I'll start looking to what do you call that? Looking to sell again. Okay, looking for an opportunity to sell. Okay, so I hope that this 1/3 rule and this 50% rule helps you out with your trading and investing. And if you want more help in trading and investing, that is solid help and that comes from the real world and not just from theory, go check out and get a copy of the Cryptocurrency Investing Blueprint at www.cryptocurrency.market/blueprint. And in there, we explain a lot more rules like that and a lot more strategies like that, and we explain how it's done. And the beauty about it is that a lot of the students that we have, they like it because they're able to, as we go through the markets, I share with them when I'm doing that. Like I'm sharing with them, hey, you know what, I'm starting to sell now in my market because it's hitting that 1/3 rule, or it's above that 1/3 rule, it's below that 1/3 rule, right? I cannot give you guys financial advice. I'm not a licensed financial advisor. I can only share with you what I am doing, okay? So thanks for watching this video. Be sure to follow me on Twitter at HeyTaiZen, okay? And go get your copy of the Cryptocurrency Investing Blueprint, and I will see you guys in a future video.